of the most practical and important panels that you'll hear today. Forever, it's getting payments into your offering has been fraught with friction. Maybe you could, maybe you could wire, maybe you send a check. The options for funding have been relatively constrained until very, very recently. Today, we're going to have 3 experts, and also one of the folks on our team, Cole Pelham, who is going to moderate a panel on how you can use all different alternative sources and even traditional sources to fund your offering. So let's welcome our panelists up to the stage. Thank you for fixing that. So, from my right, we've got Jim Dowd. Jim is the founder and CEO of North Capital Investment Technology, otherwise known as NorthCap. They provide infrastructure technology and services for exempt offerings for intermediaries and issuers. Jim doesn't just have that. He also has a really, really cool ATS called PPEX, which is something you should ask Jim about. Next to Jim, we've got Edward Rodriguez from BPN. Edward is the CEO of BPN Capital Group, a Miami, Florida-based fintech multi-service firm powered by blockchain technologies. A serial entrepreneur and longtime commercial finance and real estate professional. Edward's also a client of Vertalo. Closest to me, we've got Michael Russ. Michael is the head of investment partners at Alto IRA, and the leading platform for investors of any size and level of sophistication to use their retirement accounts for investing in alternative assets. So thanks very much for joining us. And is it Colin?
It's actually you.
It's me? I'm doing this one?
That's what my note says.
Is that what your note says?
You're the moderator.
Look at this. You know what? We've got so many things, and I am the moderator for this panel. So I'm super excited, as you can tell, to moderate this panel. And I'm really, really excited, actually, about introducing these panelists to you, because this one piece has bedeviled investors in private offerings forever. And I believe that this group here will bring you new insights and new methods for fundraising. So one of the most practical things, and the options you'll learn about today are incredible. So, Jim, can you tell us a little bit about North Capital, the firm, what you've been building over the last decade at this point, and how we got together?
Sure. Well, thanks very much. So North Capital is focused on transaction technology for exempt offerings, and basically we built our technology stack as an API first platform, and essentially all of the API functionality that we provide focuses on different parts of the private offering process. So exposing the offering and documents to investors in a secure fashion, investor onboarding, transaction technology, so the actual execution of the purchase, and then funding. And now we've moved into secondary trading through the PPEX ATS, which Dave mentioned earlier. And the funding piece of it is, as was referenced, has always been a complicated piece because of the various regulations that affect not only the providers of the accounts related to those payments for those issuers, but also for the intermediaries that are involved in the process. Because as a regulated industry, if you're a broker-dealer and you're involved in an offering, you have to conduct it in a certain way. So we've kind of built our business around first the API stack to control those different parts of the process, and then layers of technology on top of that working within the ecosystem. So we're primarily a business-to-business firm rather than sort of offering a direct platform to retail, although a number of groups use our technology along with other technologies from folks in this room, including Vertalo, to kind of run those types of platforms.
That's great. We've been working on a very deep integration with North Capital for some time now. It was something that, like so much of the stuff that we developed, was partner and client generated demand, and super excited to have this functionality built in, because reducing the friction in the funding process is critical. Being able to do an ACH payment quickly into an offering, it can often be the difference between losing an investor, okay, or losing your allocation in an offering. So, if something's super popular and a lot of folks want to pile into it, the issuer raising the funds is going to go with a first in kind of allocation, and so reducing that time that you would take to do a wire is you could lose your spot in the offering. And the other thing is that how many folks here have raised money, they get people to sign docs, and the money never shows up. Well, platforms like North Capital should connect the commitment with the actual funding, and that's very, very critical, as any entrepreneur knows. Edward, you represent a system and an approach which is maybe not new to this audience, but is new to the larger traditional finance community. Which ways are you focused on helping offerings get funded?
Correct. So pretty much it was a problem that we had ourselves, and we are problem solvers. So we wanted to, I have a very big background in blockchain and in mining and in quantitative risk analysis. So when we started creating offerings ourselves, we wanted to allow people with cryptocurrencies to invest in our offerings. And the friction, there were a couple of vendors out there that had an option, but it was not what we were looking for. We wanted something that someone with 100,000 can actually go ahead and do it instantly. That's what crypto is all about, allegedly. And if we had someone that wanted to come in with 10 million, we wanted to do it instantly as well. And we have created a solution that allows that. If you have a client that wants to invest $10 million into your offering, it takes 24 hours for us to have the dollars, not even the crypto, in your issuer account. Within 24 hours, we actually are able and capable to do that. Not only that, the 10 million is a cap per transaction. So if you, let's say, have a client that wants to come in with 100 million in Bitcoin, we could actually handle that. They could do up to $10 million transactions and go in and fund that offering for 100 million in 24 hours, right? Wow. And I mean, it's so interesting because, again, at first we did it to resolve a problem we had ourselves. But then after we solved the problem, we decided to make it a service to allow other people with the same challenge to have this frictionless way to be able to do this. Our biggest industries are real estate and commodities. And A lot of people don't know this. I mean, I that started mining Bitcoin and Ethereum and Litecoin in 2014, there are people that are billionaires in the space and they want to diversify. And when you talk to them about 100 million, it's a joke. Because you got to understand, these guys have money, invested in Bitcoin at less than $1,000. And we were so excited about the movement that for us, we didn't look at it, we didn't think it was going to go up to 60K back then, but we knew what we were dealing with because we understood the industry. And again, this is a way to allow them to diversify. That now they can say, we can go into a security offering that's backed by something, which is one of the largest challenges to some of the people in the industry now. Look at what happened a couple of days ago. There was a firm that went to zero, right? There was a crypto that went to zero. Obviously, if you are diversified and you don't have all of your holdings in the crypto space on a single, or just in the industry itself, right? You want to be able, and right now, if you want to do what I'm telling you, if you want to take out $10 million out of a crypto exchange, good luck getting your money fast. It can take you and not because of the crypto exchange, FYI, mainly because there's a 78% chance, and this is not a number I made up. I done it myself, right? I've been in that trap where there was a point I wanted to buy a condo, and pretty much I needed to replace the money with my own money, even though I had money that I was pulling out of my crypto portfolio. It took 6 months for me to get my money. You see, so this is a real problem. And to all of you that have offerings, believe it or not, there are people in the crypto space that want to diversify. There are people in the larger spectrum, mainly miners, that have access to so much liquidity, but again, they're trapped. There's not a lot of options on how to move their money.
I think everyone here in the room would be happy to take that money, Edward. So thank you for offering that diversification opportunity. Michael, why don't you tell us a little bit about Alto IRA and why this is also another real game changer for maybe not the crypto folks, but maybe some of the folks here in this audience or your parents. So.
Yeah, absolutely. So Alto IRA is a self-directed IRA custodian that enables individuals to use their retirement account assets to make investments into private markets and alternative investments. Today we have two consumer-facing products. One is a crypto IRA that's integrated with Coinbase and allows investors to buy and sell any of the 120 plus cryptocurrencies available on that exchange. We also have a standard IRA product, which is maybe more applicable to this room, that allows investors the ability to invest in anything from private equity to venture capital, real estate, tokenized assets, kind of any alternative, you name it. Today we have 85 plus investment partners that are listed on our public-facing website, accessible to all of the Alto customer base, a number of which are represented in this room today. But we also facilitate investments into thousands of other deals that are less public-facing, but have a need to accept those IRA dollars. And Dave, to your prior question too, I think the reason that it's appealing to folks who are in the business of raising money is, one, there's a whole bunch of available capital specifically earmarked for investment. $35+ trillion in the United States is in retirement accounts. And so if you don't have a solution for capturing those dollars in your fundraising process, you're missing out on a really big opportunity. If you go down to the household level, 70% of a household's investable assets are in retirement accounts as well. And so as you're having conversations with individual investors, if you're not talking to them about IRAs again, you're really only having conversation about 30% of the dollars that they have earmarked for investment. when you look at individual investor portfolios, it's about 2% is kind of the average allocation to alternatives, and we can debate forever what a more appropriate number is, but I think everybody in this room would agree that it's a number that's higher than 2%, and so there's a need and a demand for the ability to access alternatives, but there's not necessarily the vehicle to do it, especially on the taxable side of things, and so opening up that door in your fundraising process is a really important piece of being able to capture more investments from fewer people, hopefully, which as a fundraiser is generally the idea. Let's get as much in with as few folks as possible.
So there's a time consideration in investment, and earlier in Vertalo's life, we had one of our team members invested from his IRA, which was held at a traditional bank, and it was money that frankly that we needed, and it was probably the most clownish, ridiculous process that we've ever gone through in accepting funds. So, starting with you, how long does it take from when an investor identifies an asset that they want to invest in and that they can deploy and fund through your system? And what are the considerations for what you'll enable to be funded and other kind of operational elements for the users?
Sure, yeah. On the operational side, we're a self-directed IRA custodian, so whatever the investor deems is appropriate for themselves and their portfolio, there's some basic checks that we'll do to make sure that it's applicable based on the IRS rules and things like that, but generally anything that is an alternative and fits in with their portfolio, they can invest in. I know you guys have had experience. Anybody who's tried to make an investment into alternatives inside of their IRA has gone through probably the headache with traditional custodians of months and months and paperwork flying back and forth, emails, phone calls, faxes, things like that in order to try and explain what you're doing and why it makes sense for the portfolio. So we've really kind of cut that process down to if you have an account open and funded, you can e-sign inside of your account and have that processed in the same day. If you're new to Alto and you need to create an account and initiate funding and then e-sign that paperwork, it can all be done online in one sitting in less than 10 minutes. So really taking a process that historically I as an advisor had gone through that and it's taken a couple months to get done and funded, down into something that takes 10 minutes or less.
That's amazing. Edward, you brought up a statistic. I think it was 78% or something like that. I'm interested in your completing that thought for that problem, and also in what you're doing. What does it take? And I'll preface that question or add to it by saying, we understand that there are AML issues and et cetera when you're investing using cryptocurrencies, even the most legit currencies like Bitcoin. Can you get into some of the operationals on this?
Yeah. So to finish the thought, one of the main problems is, again, when your money goes from an exchange as an ACH majority to a traditional bank, it gets flagged as fraud. Mm-hmm. And pretty much it has to go through a certain process, mainly based on the amount, right? So there's different brackets within that bank. So based on the amount, they have a process that they'll put you through, right? So what we have done is we have created a custodial system where we already have a community of people that have money in the industry, in the crypto industry. So we already have created a solution for them that now they're going to be able to have a custodial account where they can have dollars and they can have crypto. We accept right now about 18 of those, right? We first created it for our own community, and in about 4 weeks we're going to launch it and allow everyone to actually come in and register an account with us. When clients register with us, they got to go through AML, they got to go through KYC. Depends on the level, or if it's a business, they might have to go to KYB. Aside from that, we're also doing, which is something that I barely hear people talk about. It's taken so long for BPN for us to get to where we're at, that we want to make sure that there's no dirty money coming in. So we have actually created a solution to do AML on the wallet of where the money's coming from. And sometimes I ask myself, God, I mean, it's blockchain. Even if it's 100 years old, we created an algorithm in partnership with a couple companies. One of the companies is Elliptic, that it goes and reviews every single transaction that wallet has ever been through. Not only that, it correlates and checks the OFAC. It checks all of the lists, and this is in the matter of seconds, because it's a database, right? That's the beautiful thing about blockchain. So it doesn't matter if it was 10 years ago, 15 years ago, if the wallet had ever touched or had an interaction with another wallet that either received a ransom or that it was flagged as a high risk because of money laundering, or the person that moved the money came out of, let's say, like the Silk Road, which right now people have forgotten about, right? So that's the beautiful thing. We have created a system and a solution that we make sure close to 100% that that wallet has not interacted with dirty money. And that's the beauty of blockchain, because it's like math. 2 and 2 will always be 4. It doesn't matter what I do to the equation. That's what we have gotten close to here, which pretty much allows us to say to you guys creating the offerings, literally you can truly say this client or this investor has been through the due process to make sure that you're not getting dirty money into your offering. And all it takes is minutes. You can literally sign up. We have created an app. You can go through AML, KYC. If you want to move money from a crypto wallet, that wallet is going to be put through AML, and pretty much you could move in the money as soon as you move an approval. You can invest. Let's say we've been talking to Vertalo about giving you guys access to the tool so you can have investors invest into all of your clients' offerings through Bitcoin and USDT and ETH and all of the other currencies. That opens the doors to every single client Vertalo has to now receive investors from the crypto space.
I've got an idea. How about you use this system for you to invest $1 million into us today? I want to see how quickly this really works. I'm not sure I believe you. Okay, I think that's the only proof. Did everyone else agree? Sounds like a good idea.
We're gonna do that
doesn't it?
after lunch, right?
I mean, right? Let's do that. So Jim, I'm just a regular accredited investor who has a bank account. I've got a bunch of useless fiat in there, and I want to invest in high growth startups like a company in the digital asset security space. What's the user experience for someone who wants to use your service to deploy, like limitations, gates, that wants to deploy into an investment, like say on an offering that's being run on Vertalo?
Yeah, so the user experience really depends on the platform that's facing the user. So in your example, the great thing about having an API-driven system is that whoever controls the platform basically controls the user experience and when the functions get called. And that's, we feel that that's where a lot of the adoption has come from platform clients that have a very particular way that they want to engage with clients, and then they can create their user journey, their user experience, and then plug the API functions in, where they need to. So in a typical example, if someone, basically wants to try to get someone through the process as quickly as possible, then essentially it's collecting basic information required to run KYC and AML on the client. It's exposing the offering, documents and details related to the offering, having them execute subscription agreements, which is all done electronically, can be done with or without signatures, depending on what the terms of use are for the particular platform. And then it can be funded with ACH in real time, and for certain offerings, even credit cards. So Reg crowdfunding, which is a sort of a growing additional exemption. It's not the most common exemption that's used, but it's a growing exemption, are funded with credit card transactions all the time. And it really comes down to economics, because those types of deals tend to be smaller deals with smaller amounts, and nobody really cares about a 3% fee on a $25 investment. If you're talking about $1 million, a $10 million investment, well, then you're probably going to send a wire transfer to kind of manage the fees. But the point I think that you made earlier about, you know, kind of the investing experience being so terrible when you use the example of the IRA, I think that really was pretty much the whole experience for all private securities, you know, until about 10 years ago, when some of these solutions started to kind of come on the scene. And really our whole API stack and the related applications has been designed to try to compress that conversion process, because clients don't want to take sort of 2 weeks to, you know, review an investment, send back, you know, checks through the mail, you know, paper subdocs, et cetera. I mean, a lot of people, you know, probably don't even own a printer anymore. So if you're required to print out documents and then sign things, it really slows down the process.
So you were just talking about fees, and people don't like fees much. We take payment in Stripe, and boy, that thing is brutal. It's incredible. What a great business those guys have. Just a couple of lines of JavaScript, and next thing you know, you're paying many percents. Who pays for all services? So is it like a two-sided take rate with the investor paying a fee and the issuer paying a fee? What happens if the funds are not accepted? Like, how does this work? Because I think that for folks considering this, if you're raising funds, there's always cost involved in raising money, and it starts at going out and marketing and all the way through to funding. Jim, what's your fee structure, if you want to disclose it, and what should issuers and investors expect to pay?
Yeah, so the way the business is kind of evolved over time, it's pretty much of an issuer pays type model, and that's typically just it doesn't have to be that way. I mean, we have seen issuers try to build in fees to investors, but the user experience just hasn't supported that. I mean, in most cases, issuers and platforms want to kind of expose a single number to the investors, and then the investor subscribes for that investment, and a portion of those proceeds are used to fund the infrastructure that goes into accepting those types of subscriptions. So our particular fees, are generally broken down into licensing, a license fee for whatever piece of software technology is utilized. So if they happen to access that technology through Vertalo, then it would be, sort of one fee schedule, because Dave's a tough negotiator and he's gotten the rates really low. If it were through another provider, then it would be another fee. But it's there's a license fee component, and then the transaction fees are pretty much run through at cost. So there's a nominal fee on ACH, but the credit card fees and that are pretty much what we pay for Reg CF. And then there's other incidental charges related to KYC and AML, and if there's a manual investigation, we try to price everything based on the cost of delivering the service. And what we found is that whereas in kind of private placements, private offerings that maybe were done 20 or 10 years ago, where the only way to make it cost effective would be to have very high minimums, because of the manual work involved in reviewing all the documents and checking the KYC and all that. The minimums have come down very low. So we do offerings with minimums as low as $5. And the transaction volumes have also grown. So, we've done over 280,000 individual transactions, and that's all just, investors cycling through very quickly, subscribing on deals. So the cost really, we've tried to structure it in a way where it's not going to be a pain point for investors. Once you have the license, then we want you to run through as many investors as you possibly can. But hopefully cost isn't, really hasn't been a barrier relative to the time savings benefits and the increasing accessibility of investors.
That's great. And Edward, speed of blockchain, there were some speed bumps on the front with the wallet thing, and there must be some cost, because I can tell you when I use, centralized exchanges, the cost can get pretty high. Are you cheaper than than Coinbase?
That was the main challenge, right? Because again, it's a problem that we had, and for me, they were too expensive. I mean, we got today over $20 billion worth of deals that we're working through in real estate. We don't afford to pay 7%, 8%, 10%. That's madness. Mainly when you want to go and put this in front of people that, want to diversify, but they're not stupid, right? So, I mean, we had to actually get the fees down, and that's why we came up with our own solution. Not only that, I mean, right now we have a fee structure that is a share fee structure, so it's a licensing fee, and we'll charge a small portion to the offering, and then we charge a small portion to the client coming in. The client is already expecting in the back of his head that this is going to be expensive. So when you tell a client you can go from crypto to dollar at a limit of 10 million per transaction, and all we're going to charge you is 2%, 3%, they're like, where do I sign up? Sign me up right away. Because it costs regularly between 7 to 10, plus the risk of getting your money stuck for months.
Right, it's like it's slippage. It's a form of slippage.
Correct.
And big time, right?
And not only that, I mean, on the side of the person with the offering, which it was also one of my biggest concerns. Let's say you get a client to send you money from Coinbase, right? Directly from Coinbase. Well, that client could be someone that passes AML and KYC, no problem. But he has a friend in Russia that received a ransom for $100 million and pass some of that money to him to a mixer, and pretty much when it gets to Coinbase, the money's kind of clean. And because they're not doing AML on the wallet itself, now the person passes AML and KYC because the person is clean and has an account with a large exchange, but you really don't have a way of knowing if that money is clean.
Right, and the next time you go to do something with it, who knows whether it's going to get flagged. It's none the wiser. So, Michael, are you taking advantage of old people and their IRA accounts by charging them high fees? Basically erasing their returns, or are you nicer to the old-fashioned investor?
We're much nicer. No, it's a pretty straightforward fee structure, and honestly, in this day and age, in the retirement account world, you can't charge exorbitant fees because you can go to Fidelity and Schwab and TD and all these other groups with low-cost trading, and it just doesn't make sense. So our fee structure is pretty easy on the customer side of things. On the standard IRA side, you either pay $100 a year or $250 a year as an account management fee, and then $10 or $50 per investment, and those kind of vary based on whether or not you're investing in one of our investment partner deals or bringing your own deal to the platform, and some of the nuance associated there. On the crypto side of things, it's just a 1% trade fee, similar to what you would see on other crypto trading platforms.
That sounds better. Yeah, that's great. We have 15 seconds left. If anyone has a question, but we are actually going to lunch now. I think so, right? Did I get that right? Yes. So Danielle, the boss in the back, says that is lunch served out there? Yes. Okay. I would like to thank these friends and partners and panelists here, like all folks that we're working with, and meet the folks that you met this morning. Go say hello. We've got no panels for the next, 45 minutes. Go grab some lunch, meet some new people, and then come back, and we'll hopefully all learn some more this afternoon. Thank you very much for your attention.
Thank you.
Thanks.
Yeah, no, that was fun, man.
Fun as always.
That's great.